कर दो announce. Uh, Hello everyone. We'll be starting the event in 2 minutes. All of you please make yourselves comfortable. We'll be starting in 2 minutes. Good evening everyone. Request everyone to occupy the seats in the front, please. Uh, Good evening everyone and a very warm welcome to all of you. I also want to welcome the folks who have joined us on YouTube, the TMI group employees and well-wishers who couldn't join us today. I am Srinath Santanam and I am the head consultant for the Quanta People company. It's an honor to welcome the eminent gathering of CEOs, CXOs and leaders who are seated here who are shaping India's future. So before I begin this event, I want to acknowledge the contribution of two wonderful ladies, Archana Santani and Akshita Jaykumar. Archana is the Chief Marketing Officer of our company and Akshita is the Chief Product Officer. Due to a medical emergency, they could not be here, but this event would not have been possible without them. So a big round of applause for them. So each year, over 6 million graduates enter the workforce, many into marquee organizations such as the one you're heading, full of hope and full of excitement. However, at the end of the first year, their dreams are shattered. Productivity is very low and attrition keeps on climbing. The workforce is depleting and the sparkle in the eyes of people and the sparkle in the eyes of graduates who entered your organization suddenly turns into tears. What goes through the mind of young India? What goes through the mind of young people when their dreams are shattered, when their dreams get cracked? To bring this moment to life, please watch a very short AV video that we have made for you. This story represents the story of one very young chap named Arjun. It's a sand art by a very renowned, famous artist called Mr. Venugopal. Can I please have the AV, please?
This is Sudha and this is Ram. They are from Warangal and come from a humble background. Ram is a farmer and Sudha a homemaker. After 5 years of marriage, Sudha is going to be a mother. Sudha and Ram are very excited to welcome their first baby. From now on itself, they start to save every penny that they could. They would eat less but save more. From the time Arjun was born, the drama around his life began. Ram and Sudha wanted their little boy to get the big school in Warangal and start schooling. Every single exam. Arjun worked hard, persisted his lunchtime. His mother, his father, his friends and neighbors. He had become a local hero and other parents started dreaming of their children succeed like Arjun. He was on cloud 9. Both Sudha and Ram walked with their head held high. Arjun was ready to take the big leap from Warangal to Hyderabad. It was a dream come true for him and his parents. They were sad about him moving out of their home, but were very proud that he is going to move to a big city, earn money and have a great life. This move was full of aspirations and new hope. Arjun joined ABC Bank all ready for his first day. Initially, it was a smooth entry. The HR welcomed him, made him comfortable and even gave him a joining kit and an office tour. He made Arjun meet the rest of the team and Arjun felt like joining as a sales executive was the best decision he made. When day 2 came, the scenario changed. The manager gave Arjun a tough target for the month and asked him to hit the road running. Arjun was yet to learn the job, but he was expected to perform from day 1. He did not get manager support, work was piled on to him and he started putting in 14-hour shifts. His aspirational job became a nightmare that he lived every single day, battling everything alone for 6 long months, probably the 6 longest months of his life. Work pressure, low salary, and a boss that made his life miserable. Every night when Arjun came back to his lonely PG accommodation, he missed his parents dearly. The only reason he did not quit earlier was that he was able to send some money back home to help his father repay the loan he had taken against his land for Arjun's education. But he could not take it anymore, and he quit ABC Bank. Arjun was depressed and obviously in a downward spiral. 80% of the 6 million graduates that pass out every year realize they are unable to perform in the first 6 months on the job and quit. This is very traumatic for the young graduate and even more for the parents. So many youngsters each year go into depression because of this turmoil. The parents are left shattered, seeing their little Arjun, who has been the apple of their eye and for whom they have sacrificed so much, he is unhappy because, according to him, he failed. What happens to Arjun's mindset? Since he is in a downward spiral, he is now looking for any job that comes his way. He is very likely to fail in that too. He will only keep jumping jobs now. The dagger of depression constantly lurking on his head. There are millions of girls and boys like Arjun in India. Who is going to help them win in their first job?
The video that you just saw is the story of 80% of the 6 million workforce that joins our country every year. What do we do to make people like Arjun successful? What do we do to make sure that their productivity is high and their attrition is low? So for our first session, I'd like to introduce two towering leaders who are going to have a fireside chat on this pressing question as to why productivity and attrition, low attrition, have become a norm for most of the companies. Our chief guest today, Mr. Sanjeev Mehta, is the executive chairman of L Carteten India, prior to which he spent 32 years at Unilever, and in that 32 years, he was the chairman and CEO of HUL for a decade. He led the company to a 5-fold increase in market cap. Former president of FICCI, he co-authored India at 100 and is a strong advocate of purpose-driven business, climate action, and inclusion. May I please invite Mr. Sanjeev Mehta, sir, to come onto the stage, please. A big round of applause. Our guest of honor today, Mr. Sandeep Ghosh, is the founder director of NISM, where he also set up the National Center for Financial Education to drive financial literacy across India. A career central banker, he served as the head of HR at RBI and the chief of staff to 3 governors. He has led premier training institutes like CAFRAL, the College of Agriculture Banking, and shaped leaders of India's banking sector. He continues to serve on the board of leading business schools and companies. May I please request Mr. Sandeep Ghosh, sir, to come onto the stage, please. This session will be moderated by Mr. Srinivas Nagappa, an FMCG expert with over 40 years of experience in general management, executive coaching, and strategic consulting. He spent 22 years with Unilever across India, Bangladesh, and China, and has served as a CEO, country manager, and board member in both B2C and B2B sectors. An ICF certified executive coach and an IIM Ahmedabad alumnus, he specializes in coaching senior leaders, building alliances, and driving business transformation. Ladies and gentlemen, please welcome Mr. Srinivas Nagappa onto the stage. So the first session is going to be a fireside chat between Sanjeev Mehta sir and Sandeep Ghosh sir, moderated by Srinivas Nagappa sir. And the question that we want to address today is why has productivity and attrition, low productivity, high attrition and low productivity become a norm for most of the companies? Yes, sir.
So good evening to all of you, and particularly to you both. Sanjeev and Sandeep. We're very happy that so many of us could make the time today, despite it being a working day. And as Murli kept telling me, he was hoping that the rain would stay away, and I think your prayers have finally worked. You've obviously heard a lot about what both these distinguished gentlemen do. Maybe I'll just take half a minute and ask each of them what's currently occupying you. We know a lot about what all you have done over your distinguished careers. What's currently occupying you? Maybe take a minute and just let everybody know, please.
Thanks, Srini. Yes, Srini has been my colleague, and I now know him for many years. We worked together in Bangladesh. I'm now into private equity. So L Catterton is the largest investment vehicle in the world focused on consumers. And in India, we have a joint venture between me and L Catterton. And I also chair the Asia Fund. Earlier, I used to help create value for one big company. Now one helps create value for many of our investee companies.
Excellent. Very nice to hear that. Sandeepji?
So, I currently engage with business schools across the globe, mainly UK and India, and try to interact with students mainly with the broader aspects of career counseling and guidance as to how they should treat their first job as a career rather than a job. And on my own, I and my wife, we run a school known as the Career School for Parents. And this is only by referral. There's no advertisement. If somebody knows us, they will send you to us. Mainly because today education has become very expensive, and the parents should be aware where they are investing in their child's future. So it is with that, both of us actually started the concept of career counseling in India in the late 70s. And today we run the Career School for Parents. It's a very fulfilling, I would say it's a very fulfilling engagement where you meet young parents with their budding kids, 18 years old, and wanting to strike the world.
Very nice. Thank you very much. Appreciate that. I just thought we would start this conversation with the end in mind. I think the problem has been well articulated. Frontline attrition and lack of productivity is something that is certainly a serious concern for all of us. But I thought we would start with saying and asking these two gentlemen, what good practice, what best practice have you seen in part or in entirety, which actually addresses this problem? They've, of course, been with multiple organizations and have exposure across financial services, FMCG, etc., pharma, etc., etc. So I think it would be a good thing to start by saying, what are the good practices we've seen? And then maybe take the conversation forward into saying, therefore, if we had to bring some of those practices into our organizations, what are the enabling conditions we need to create? So may I request either of you to kick off and talk a little bit about what best practice you've seen. And
Thanks, Srini. Let me give you a couple of stories. First one I'll tell you from my days in Bangladesh. This goes back to 2001, 2002, when I had just taken over as the chairman of the company over there. And we had a very militant trade union, extremely militant. I remember just a few days before I had come into Bangladesh, they had stripped naked the personal manager in the factory and had locked him up for over 18 hours in a room till the police had to come and rescue. That was the level of militancy. And it was, the productivity, of course, was very low. There was double manning. You couldn't sack a guy because they would go on strike. and they had massive political backing. Now, Bangladesh, like India, is a very hierarchical society. And there was a very clear gap between the management and the blue-collared workers. And we thought, taking them head on would not serve the purpose, but it will only compound the problem. Normally, what happens in most organizations when it comes to either the people at the blue-collar stage or in the front line, you assume that they are human beings with hand and legs. So we said, let's treat them not just as people with hands and legs, but also people with head and heart. And rather than confronting them, we said, let us make them partners to progress. So we started reaching out to them, and soon it developed whereby every quarter I would go to our main factory in Chittagong, sit with the union, and share with them the strategy of the company. Initially, it was the broad outlines. Then increasingly, we got deeper into talking to them about competitive threats, talking to them about new brand launches, talking to them about what are the challenges facing the company. And slowly but steadily, we started seeing a very different response. The discussions from canteen food and over time, but they wanted it to be mandatory earnings for everyone, the discussion moved on a different level altogether. And then we introduced TPM in the factory, which was total productive maintenance. One of the core things about TPM was investing in the training and development of people. And the people soon realized that they had an enlightened self-interest in company's development and growth. If the company grew, they will have better remuneration, the company will expand, there will be a better chance of more employees coming into the company. And they started responding unlike what they used to do in the past. And in a couple of years' time, all about being a militant trade union became history of sorts. It became a company where the union and the workers became an integral part of company's growth journey. We brought in new management practices, linked their wages to productivity, helped discover the hidden factories in the company. Hidden factories implies where your capacity utilization is so low, you can de-bottleneck it and create more capacities without putting in more capital investment. And the results were remarkable. So trust begets trust. If you start with the premise that they are our people and we are vested in them, and there is an unwritten covenant that I will look after you and you will look after my business, then the magic happens.
No, so before we got into this formal setup, I was telling Sanjeev that we work for two organizations which don't fit into today's subject. Attrition and RBI don't go together. We have 1% attrition, and that also at the middle management level. In fact, when I used to head the HR in RBI, we formally took out a circular because most financial organizations are pyramidal in shape, where bulk of the people are at the bottom of the pyramid, and then it continues to become steeper and steeper. So at some junction, promotions do become difficult. And we would give full opportunity to our employees to seek any help from headhunters in the market, the best headhunters in the market, to get placed anywhere they wanted to go. Nobody left. Then we started a system that we will allow you to go and work for any organization for 3 to 5 years. And whatever is the difference, if you get the same salary, it is perfectly fine. But if there is a differential salary, then RBI will meet that differential. Some people went, but when we looked at it closely, they actually moved because they wanted to move closer to the house rather than be attached to that company or to an in fact, you could join an NGO also. So sometimes the underlying, what Sanjeev mentioned, is if you treat your people like your people and provide a fair opportunity of growth, I think that is all what people require. One thing which, of course, I have been closely associated with the financial sector, and especially when I joined NISM and started working in the capital market space, I found that the things are much more difficult than the banking sector. Over here, people at the bottom of the pyramid is virtually 90%. And there is no structured career path for anybody working at that level. Attrition is very, very high, very high, even in the banking sector. Take, for example, State Bank of India. Attrition is 3% today, and that also mainly focused in the middle management. Whereas HDFC, which is of the same size, around 2 lakh plus employees, attrition is close to 30% at the front line. Both big organizations, both good organizations. But in State Bank of India, a probationary officer can see the chairman who also used to be a probationary officer. That you cannot see in HDFC. So that is a very big difference. That you know that there is a career path for a person, that if I have joined at this level, there is a possibility that if I give my best, I may go up to that position. So I fully agree with Sanjeev that if you take care of your people, if you're learning, if that whole concept of skilling, reskilling, and upskilling is on a roller coaster, you have no problem. But unfortunately, for both our organizations, HUL and RBI, we have not been able to instill the same thing. In fact, a couple of days ago, Mr. Mudidharan wrote a piece in the Telangana Times where he has quoted that why RBI cannot get into this space. So RBI today has made a statement, and he had used that statement, that possibly attrition is no more an HR issue. It is a strategic imperative. It is a necessity. Either you look at it or institutions will not be able to survive over a period of time. So that has triggered some board level discussions. I've been on a number of financial sector companies' board. I don't feel the frontline is discussed. I've heard the name foot soldiers, and they remain to be foot soldiers.
Absolutely. I think that brings us to a very interesting point that, and I was talking to a couple of people prior to this, I think most organizations see frontline, unfortunately, as a necessary evil. Almost that you need to have them, otherwise how do you get the top line, etc., etc. But you know, if we didn't have them, that would be even better. Yeah? And I think if you pick up the points that are talked about, enlightened self-interest, there was all this beautiful story about creating trust and a line of sight in terms of the career, so the career growth. It brings us back to the basic question, which I think are two. One, why is the C-suite not bothered about frontline productivity and frontline attrition? Why has it become a BAU? That's the basic first question to look at. And secondly, how or why should they think differently? What sort of enabling conditions do we need for the C-suite to start looking at this as a real issue?
Let me give a story from my days when I was heading HUL. When it came to our own salespeople, our rate of attrition was very low. But we have a system whereby we sell the goods to the distributor, and the distributor in turn sells it to the millions of outlets that HUL's products are available at. And we have 3,000 distributors, and there are about 35,000 salespeople and about 20,000 merchandisers. Now, the distributor salesmen are legally and otherwise the responsibility of the distributor, because the company pays remuneration to the distributor, and it is based on a system of ROI, and the distributor in turn gives the salaries to the people whom they employ. In paper, that's how it is. But remember that when the distributor salesman goes into a store, he is representing brand HUL. He may not be on the payroll of HUL, but he is representing the brand HUL. Every day, the shopkeeper looks at that salesman as representing Unilever. Yeah? Now, there was a period of time when the platforms came into India, the e-commerce ones, the Amazons, the Flipkart. And for them, the easiest way to recruit was go and pick up the distributor salesmen of companies like HUL, because they were highly trained. And suddenly our attrition rate at the front end skyrocketed. Yeah, it went up to 15-20%. Now, why this attrition rate is very bad? Because the salesman builds relationship with the trade. And even if we were paying well, to recruit a new person, to train a person, build relationship would take a few months. And during that period, in that territory, invariably, you would end up losing growth. It became a serious issue. So we did some defining changes in the way we looked at the whole system. The first, we said, the responsibility, or if I may call it, moral ownership of the field force has to be with the company and not with the distributors. That was the big shift we did. So we told the head of HR, from now onwards, that ownership rests with us. So you're not responsible just for the people who work as salespeople within HUL, but you are responsible for the entire ecosystem. The second thing we did was, we looked at the records. We did some forensic checks. What the distributor used to tell us, that the salary they are paying to the salesman, not everywhere they would end up paying the same salary. Yeah, they would be paying 20-25% less to the salesman than what they would show in their ROI calculation. So we said we have to stop this, and the best way would be direct transfer of money. Yeah, so we set up a system whereby the salary and the incentives to the salesman would go directly. We had another for legal purposes, another company which would do that, but it won't be routed through the distributor. It would get deducted from the distributor's commission. The third important thing we did was, we said, HUL sales force. Every year we were expanding, we were recruiting in our own company. I mean, someone who is employed within the company. And we said, every year amongst the new recruits, about 15% of the new recruits we would recruit from the pool of the distributor's salesmen. Yeah? They may not meet the benchmark of education that we would normally have for people who we would recruit directly in the company. But we said not to worry. Those guys are trained. And we will provide them the skills and upgrade their skills. But just think of, for a distributor's salesman, yeah, working in Eastern UP, working in Bihar, working in Orissa, he today saw there was an opportunity to become an employee of HUL. Just think of it, what a change it did to the morale of the people. Even if you have, say, 1 in 10 odd of getting into HUL, that was a big enough motivator to say, hey man, let me stay around and have a shot at it. And then we said, we have to completely change the way we are going to help them do their job. One was, we started with training them with bite-sized videos. The other was, during the same period, we were working on reimagining HUL using data and technology, which was a huge initiative. That was a time when the cost of data in the country had plummeted by 1/20th of what it was before Geo entered. And that resulted in creation of an app called Shikhar app, whereby a retailer can place an order and we can customize an assortment for each store depending on the kind of shoppers that live in the neighborhood. That would mean that the job of the salesman becomes very easy compared to what it used to be in the past. Because here was an aid for the retailer to place an order. But we were training them, and we also realized that despite bringing in technology, we cannot dispense with the distributor salespeople. Because the last 3-4 lines of SKU that sell in an outlet would not be driven by an app. It would be driven by relationship, and it would be driven by the persuasive skills of the salesman. So think of the scenario from an era when the salesman at the distributor's end was left to the whims and fancies of the distributor, to now you have a salesman whose salary comes directly, who has been trained, who has a big tech aid in terms of the Shikhar app. So his remuneration goes up because his growth is much better. And today he's valued much more because he has a chance to get into working for HUL directly. So not only it resulted in a significant drop in the attrition rate, but it had a huge impact on the growth rate of the company. So it's very important for us to own the entire value chain and ensure that our people get fair remuneration. I think for a companies, when you look at your ecosystem, you have to move away from minimum wages to living wages. And I would not prescribe it as mandatory, but I would certainly say that those companies which are earning very well, which are creating huge shareholder value, should ask themselves, why should we not move from minimum wages to living wages? And create an environment where your salespeople or the front end people, even if they are not directly employed, have an emotional attachment to the company. That makes a world of difference.
Sandeep, if you pick up the thoughts that Sanjeev just talked about and applied back to the financial services industry, which you're very familiar with, how does that resonate?
So, Srinivas, in the financial sector, we have the largest number as frontline workers, largest number. No other sector matches this. In fact, bulk of the technology sector is also managing their financial portals only. It's not that they are engaged in anything else. And some of the things which are very stark, although they remain to be the first connect with the client for services and sales, salaries remain to be very, very low. I don't feel it also meets the minimum. And where they are able to succeed, I would say, is there's ample supply, ample supply. Today, India has 12,000 engineering colleges and 7,000 management schools. You throw a stone in a crowded place, you are bound to hit an MBA or an engineer. It is quite surprising that even in an assistant's job in the Reserve Bank of India, where we clearly say that you just need to be a first-class graduate, anybody who finally makes it is an engineer MBA. So the supply is so much that possibly one of the reasons that it has not reached or not become a concern at the board level. And currently there is no measure of productivity loss at that stage, because in the financial sector, you would be surprised, is actually suffering 120% attrition. You are recruiting 2 to 3 times in a year, 120% attrition, and it is surviving. So in a limit, but on the other hand, I would also say that the recruitment level are random, and the people whom we pick are unskilled. Hence, the pain of not paying them is not very severe. So in my previous organization, the National Institute of Securities Markets, although this was not one of the mandates of that institute, but because I have a passion for career counseling and guidance, I discussed with a couple of major banks. One of the HR heads is sitting here, who was kind enough to work with us at that point of time. And we said, we will supply you skilled manpower. You just give assurance that you will take them, provided they pass your minimum requirements. And we started doing that. We did a 6-month intensive program of certification, training, and the biggest training was in the area of soft skill, because I sincerely believe that if you cannot read, write, speak, and listen, you are not qualified. If these skills are not at the level of excellence, you are not qualified to hold any job. Today, bulk of the communication problem in bigger organization is this asymmetry of information. There's no connect with the bottom and the top. Comprehensive asymmetry of information. So we worked with these big organizations, and they would tell us that this year we are recruiting 500 people, this year we are recruiting 600 people. And we'll say, okay, we'll train these 600 people, we'll give them intensive training, these 600 people would pay for their training and would be placed in jobs where the cost of training would be just 50% of their emoluments which they would get. And the only condition which was attached to these institutions is that you will only be able to pick them up provided you are able to give them at least 3-stage movement in their career. So it worked, and I'm happy to say that the organizations were more than happy that from day one, because 5 days these boys and girls will work with us, and Saturday, Sunday they will work with the functional heads of these organizations who will come and talk to them about the culture of those organizations and the requirements which the organization had. I still feel that one space, although we keep on blaming the corporates and all, I don't feel it is the job of a business school that at the age of 24 or 25, you have to teach somebody to speak and listen and talk. But unfortunately, that is how it is. I work with a lot of IIMs today, and I can assure you that if we remove the concept of placement, nobody would be going today to these colleges. We are the only country in the world where we have a concept of campus placement. There's no other country in the world which gives you campus placement. All the universities, all the international schools with which I have associated, they have a huge career development cell, huge. And these career development cells have the information of all the organizations, their employment, their everything associated to one's career, where you can go and spend time like you spend time in the library. And from there you develop connects, and so you allow a person to grow. In this fast age of technology change, I think one person whom we have lost out, and that is the only space which you can innovate, is you. You have to innovate. There's nobody else who can take care of you unless you are ready to take care of yourself. Once you are ready to take care of yourself, I'm sure the organizations come up with the biggest support which is possible. So I think these gaps are very difficult to appreciate and understand, but since career counseling remains to be my passion in the last 45 years, and I guide students, both MBA, engineering, and mentor the middle management on career guidance, I see this gap continues to be there. Even today, anybody, any parent who comes, before even we are able to talk to the child, isko sir engineer banana hai, isko sir doctor banana hai, class 12th का marks 45% है, engineer बनाना है, and we tell them कि भाई देखिए थोड़ा मेहनत करेगा तो बैंक में clerical job मिल जाएगी, उसके बाद he can work up, there's no problem. But there is this, I would say that if the supply chain was cut, one of the good things of Indian education, at least till graduation, you need not spend money. My son passed out of the best college in Bombay. He did a BA political science, but we didn't even spend $100 in the whole year for his tuition fee. Best college in Bombay. So there is a huge amount of access to education and higher education in India, which is now, of course, becoming slowly difficult. But there is a huge access, and that is why this supply chain is huge.
Very interesting point on the supply chain and the abundance of supply. If you look at it from a different angle, and as I think both of them touched upon, productivity doesn't figure anywhere in the P&L. It doesn't figure anywhere as a line item in the balance sheet. It doesn't sit anywhere on your cash flow statement, right? But it's influencing every line out there. And in fact, even something like 10, 12 years back, there was an article in the HBR which said all this labor arbitrage of cheaper salaries and cheaper wages in India is a little bit of an eyewash because the productivity that's attached to some of this very low wage labor is extremely low. And if you look at it in real costs, probably the gap is far shorter. So I think it's probably worthwhile for all of us to take away the fact that there can be significant productivity improvements, coming back to the whole point about trust, about career growth, about planning careers, about giving them a line of sight. We are a little behind our schedule, so I'd look to bring this to a close. Could I request the two of you gentlemen, what thoughts do you have to the leaders around here? What can they go away and think of and implement, not next year, not after the next presidential election, but tomorrow morning? What do you suggest that this group of leaders actions tomorrow morning?
I'll tell you another story. During my 10 years in HUL, we took the business from 25,000 crore to nearly 60,000 crores. We improved the operating margin or EBITDA from 13% to nearly 24%. We had a return of capital employed on tangible assets of 3 digits. Yeah, 3 digits. So whatever capital is invested, you'd get the same return every year. And the market cap went up from $12 billion to $76 billion. Now, in the Unilever world, we became the lowest cost business. And if, as a nation, we have to win globally, we have to be cost competitive, we have to have superior quality, we have to have excellent customer service, and we have to innovate to lead. So cost, quality, service, and innovation are paramount. Now, HUL is also known as a company where perhaps there are the maximum number of crorepati earners, people who have 8-digit salary. On the other hand, we have the lowest cost in the industry and in the Unilever world, including China. So we can do it. We can be competing with China too. I had a very simple philosophy. The philosophy was 6, 8, 10. Employ 6, give them the salary of 8, and get the work of 10. That's what we need to do as a nation, and not the reverse. Employ 10, give them the salary of 8, and get the work of 6, which is the condition today in many parts of the country.
No, to my colleagues here who are, I can see many of them, I've worked with them. I can only suggest that have a relook at the salary structure at the base. Banking and financial sector in India is globally the best. You don't have a payment system stable, swift, and secure like the Indian payment system. NEFT and RTGS, which we do left, right, and center any time of the day, is not available globally to the most developed countries in the world. Similarly, this T+1 settlement, and now it's going to become T0, is not there anywhere in the globe. We talk about one bank failing. If you look at the US or the European model, at least 40 to 50 banks fail every year. Nobody talks about it because banking is a risky business. And that is what is ingrained in the mind of the people, that if I am banking, it is a risky business. In our case, it is not like that. Why do we have so much paraphernalia of regulation? Because there is some mantra that you are handling others' money. And if you are handling others' money, you have to take care of it. So To my friends, I can just say, do have a structure where you can have a relook at their salary, cut down their targets, which are very, very difficult to meet. You have the banking target, but not the target of selling financial products, of mutual fund, credit cards, and insurance. Don't have a target there. Give them some comfort. And there needs to be a proper line of communication. I can assure you today, there are good branch managers who are handling a huge number of relationship officers or managers who are doing excellent work because that branch manager is good. But there is a branch manager who is like the overseer of the 50s, who treats these guys really like foot soldiers. And they leave the bank not because the salary is bad, not because the bank is bad, but because that guy is bad. So just have a look. I would say that, and I've forgotten that mantra, but I used to seriously believe, recruit for attitude and train for skill. This is the mantra with which I have always worked. But somehow it's not working today. So find a mantra which works so that these people, the gap of communication from the top to bottom is reduced.
I'll just add to the mantra of Mr. Ghosh. Train the people so well that they get many jobs, but treat them so well that they don't accept any other job.
Absolutely. On that lovely note, thank you very much to both of you, and thank you all for being such good listeners. Thank you very much.
Thank you so much, Sanjeev Mehta sir, Sandeep Ghosh sir, and Srinivas Nagappa sir for this wonderful conversation. I think incentivization, compensation, target setting, productivity, attrition, all the facets of Frontline was touched in that discussion. The second session is actually going to be very interactive. It's going to be a peer-to-peer discussion. But before we start this session, I want all the leaders present here to think of one question. Just reflect on this one question, and the question is, what is your company doing to make the frontline win at work? This is going to be the theme of this discussion, and for this discussion, I would like to invite Mr. Rajesh Dahiya sir. Rajesh Dahiya ji is the CEO of Good Govern and a banking and general management leader with over 33 years of experience. He serves on the boards of Max Life Insurance, Bluestone Jewelry, and Caliber Chemicals, and has held senior roles at Tata Group and Axis Bank. A strong advocate of authentic, purpose-led leadership, he also contributes as a trustee and advisor to several social entrepreneurs. Over to you, Rajesh sir. The floor is yours.
Thank you. Thank you. And yeah, I'll try to make a interactive session, and I'll pick up from the previous panel. There are so many stories that we need to share, and each story has a message and a learning. So I'll walk up to your table, and in case you strongly believe that you don't want to answer, you can raise your finger and say, tell me to shut up, but I may spring a surprise on you with a question. So I'll come with the questions to your table, if that's okay. So, hearing the previous panel, one thought came to my mind. So first of all, I was feeling very bad because I have worked for 2 companies in my career. Here are the 2 people who worked only for 1 company. So I tried it once, which should not happen. So that's something which came to my mind. But also a story that I remembered when actually I was leaving Tata Group for another job. Then my chairman, Mr. Gopalakrishna, called me, and he says, I'll have a job for you in Bombay House. So I said, yeah, that would be wonderful, because Bombay House is both a metaphoric dream and a great job. He says, but you need to pass one test. And one question he asked me was, "Kabhi dalda becha hai?" So it's a typical HUL question, and everybody knows about that. If you need to lead, you need to do sales. And here today, I worked in a financial service company, a large bank of the country, and my colleagues are here. Many of them are from the same financial sector. We are struggling with the same frontline people who are actually selling banking daldas. They are opening accounts, they are selling loans, they are selling credit cards. And then we are talking about not 30, 40, but we are talking about something like 45% standalone frontline attrition, or maybe more, Murli. You know the figures very. Practically, we lose everyone who joins us as an industry. The question is, are they not happy with the job, or are they rejecting whatever industry they may be joining in? It may be financial services, it may be IT, or it may be other allied services also. So my first question, and the question is regarding this, the story I told you and stories that you heard from the previous panel about the pride in the role that you do at early start of your career. The promise of growth that the early job promises you, the respect that one earns in the first job. So I'll walk up to one table and request someone to share a good example, good story in terms of how do we ensure that our frontline employees get the growth aspiration fulfilled, they get respect and dignity that's desirable for them to stay with the company. Amitabh, I'm coming to you. Where's Amitabh?
Thank you, Rajesh. And maybe wrong person to answer because it's been 21 years I've been with ICICI. So long time, unheard of these days. But, I was just thinking about the topic, and I think the word productivity itself is a limiting. We should stop talking productivity, we should start talking potential, because that's what will get human to express what they are capable of. Productivity more or less gets calculated on an Excel sheet, coming out of your P&L number, you do some calculation basis what you have seen in the past, but that's not reflection of what the individual can do. And that's what my thought will be, Rajesh, that we should be discussing human potential. That will lead to actually treating each person as what he or she can deliver, and it may differ from person to person, depending on what they are best at.
So my question is, you worked with the bank, now you're leading almost a most exciting business of affordable finance, leading frontline salespeople who bring in checks of 20 to 25 lakh every day. What difference do you make to their lives?
So,
any best practices?
I won't say best practice. What we try our best, and I think it came out in the previous conversation, is to ensure that a lot of attention is paid to who do you hire, and ensure that, not only attitude, but explain the role very well, explain its sales. A lot of time, for the sake of meeting your numbers, because recruitment numbers, jobs are not explained very well, and then you end up getting people, and because they're unemployed, they'll join you, and very soon figure out that their aptitude is not meant for sales, whereas 99% of our work is sales, except some of the assurance function. That's everything else is sales. So explain the job very well, explain the culture, and look for the right fit on culture. What kind of company we are, and if that's something which we are finding out, that we have seen, it helps. Then most of the attrition also which we're talking about happens at the early stages of the career. People come in, and the first 6 months you see a lot of dropouts. So if we get the culture fit right and attitude right, and explain it's a sales job, even if you're hiring an HR person, explain it's a sales job, next 6-8 months is sales, then you move into HR. Then the HR people will also understand what it takes to do a sales job. And that's what we do.
Wonderful. I was looking for this answer. Mr. Ghosh, you mentioned about you throw a stone and there is a business school. The problem is not only of the number of schools, problem is also the promises that are being made in those business schools. Many of us have done our rounds of campuses for annual hiring, and we meet young kids of 23, 24, and the first question you ask them then, what's your aspiration in career? And nothing less than Narayan Murthy or Ratan Tata, they will reply. So what do you want to do? I want to become Ratan Tata. So that's mismatch. And in some way, those ambitions are nurtured by the business schools or engineering colleges. And that's what Amitabh, my friend, is talking about, the great mismatch between what these people come looking for in the job and what we as organization end up delivering. So that's, thank you very much for that. Similarly, the question we spoke about with the earlier panel also, the question of money, which is important. We spoke about dignity, respect, understanding job. Is money a really problem in India? Mr. Mehta touched upon that. I think all of us are going to remember 6, 8, 10, but at the same time, we must agree that we are living a world of 10, 8, 6. That's a reality. 3.5 lakh paradigm, it's talk of LinkedIn everywhere. It's a reality. When I started my career, we paid, the first batch that I paid was 3.5 lakh. Today, I'm out, my colleagues are paying 3.5 lakhs. We say that no, we pay much more, but in reality that over 3.5 lakh is going to incentives, and incentive in case you don't earn, you're out of the system. So opportunity to go beyond 3.5 is very less. And here are two organizations we have heard from the respective gentlemen that they advocate that pay well and then demand the productivity. So anyone who would like to comment on, are we able to afford in today's world in large employment sector, IT, financial sector, insurance, to pay more? And the gap is almost double, 3.5 needs to go to 8 lakh. So that's what we're talking about. I'll come to this table.
Hi, this is Vivek Jain. Thanks, sir. Good to see you back again. I think Sandeep sir and Amitabh both talked about a point, and I'd like to elaborate on that. Recruitment, according to me, is 50% of the job. And training, actually, and shaping people is the remaining 50% of the job. And if you leave either, then your productivity will be lower. Salary as a parameter, I was HR for investment banking, Ramki is over here. There is never a constraint. If I get the productivity, I'm ready to pay. It is never a constraint to pay if I get the productivity. The question that we have is that as HR or as leaders, are we able to enable that productivity? I was fortunate to work in companies like Genpact and Kotak, where you get anybody with the right attitude. The company has the capability to train that person into the CEO of the company. We have stories and examples where management really moves to that levels. I think the fundamental, if you're impatient to deal with that situation, if you're in a hurry to get people quickly and don't have time to train them, I think we'll land up in a situation of 10, 8, 6, rather than an actual example where you allow time to train, you spend time to train them, and you have the 6, 8, 10 method. That is my limited point.
Yeah, wonderful. I agree with you. At the same time, there is also a new kind of, it's not new for frontline salespeople. All of us are threatened by what AI can do in favor of me or against me. People like us are very happy. We don't need a secretary now, so just say, hey, write a response to this mail and the mail is ready. However, the same AI is getting played in the minds of frontline people, you will lose your jobs. And this discussion is not only happening among the people, it's coming somewhere from the senior people in the audience. It's become the new threat. So productivity used to be one threat that in case you are not achieving those targets is one. Now there is an unsaid or said threat, AI will replace you. So I'll again walk up to a chair. How do we deal with this? How do we ensure that somebody does, a set of people who are critical to our growth, who are the bedrock, they don't start feeling alienated and threatened by something which is equally applicable to all, the so-called AI or tech. Will you take the question? Thank you.
I think, hi, good evening, everybody. I'm Chandana Pai. And one of the key things that I've observed is, yes, there is a threat and there is a buzz amongst the young people that the roles and the jobs that they're doing right now, AI is going to take them away. But the way to look at it, especially for people entering the workforce, is that instead of fearing the unknown, which is AI, I think they need to understand how to harness the power of AI to enhance themselves and to make sure that they are delivering the productivity of maybe 5 people. And that might be the new normal, which all of us have to deal with. And I feel that it's the responsibility of the reporting managers as well as the top management to show them the way, rather than presenting it as a threat looming over their heads. Enabling people how to harness the power of AI is the way forward at all levels. Thank you.
Yeah, thank you very much. Building from the 3 questions that we discussed, spoke 3 different organizations. Let me come to the board. And how does board look at the real challenge of attrition? In my personal experience, I've seen the normalization starting from 10 to 11%, and me and my friends here, we used to actually compete amongst ourselves that if ICICI is 11%, how can I be 10.5? Today we are normalizing 40 to 45% in the boardrooms. That's a reality. And I'm talking about, again, some industries. Financial insurance sector is leading, IT is not behind. In the boardroom, we discuss about culture, but we don't realize that in case there is a 40 to 50 to 60% attrition, every year, half-year culture is walking out of the door. So how does the conversation change in the boardroom, which gives space to the leaking culture, not only to building culture? And Rajiv, I'm coming to you with this question, because you see both aspects now from the board of Shalimar Paints.
I think it's a very thought-provoking concept which you have been talking about. But looking at it from the board's point, you rightly mentioned that we are worried about the cost we have to pay for having so much of attrition first. And second, as you mentioned, if you have any plans to build any culture of the organization, which to me is very important, because your future recruitment and the productivity of the company is dependent on that. We find that if the attrition is high and there is no formal culture being built which we want, then the company is just meandering around what the market is asking it to do. And for that, it's very important. And most of the things we are looking at is very, sorry to use that word, myopic. Today, this year, these people, if you are building an organization, and I'm happy that we have worked in organizations which are for keepsake, and even people quote whether it's State Bank of India, Reserve Bank of India, or of course HLL. So point I'm trying to make is that when you have a short-term objective, which is put through the portals of your board, and the management, which is there for only short term because they have to take their own bonuses, they pass it down. Purely from the HR point of view, purely from the board's point of view, we would like to create an institution which is there for keepsake and can look at all these challenges, whether it was technology once upon a time in our younger years, now AI has come, and there's so many things like that. So point which I would like to see at the board level is that we have an institution which has a very strong base there, and 5% or 10% attrition will not matter. Today you're talking of 10% because 10% changes the game. It does not. So there has to be a huge amount of effort made by the management, its thinking, and the HR head to first, as somebody rightly mentioned, it's not a one-way road. It's a multi-pronged effort. That first you recruit the right person with the right attitude, with the right aspirations, and also the right kind of attitude, which I think Mr. Ghosh mentioned. Yeah. That if you have the, when I used to recruit people, I said, okay, if I'm taking this guy, he's a long-term liability. I have to take him for the next 20 years. Even if he leaves after 1 year, he's taken away from me because I have spent money in onboarding him, training him, telling my things, and then he goes away. And the second part is that when we are pointing out the market, you can't change the market. The only thing you can change is yourself. So as an organization, if you are able to build an organization which attracts people, understands them, what their aspirations are, see, when you look at it, compensation is the first level only. After that, your expectation or your aspirations come, which somebody mentioned that if you give them a career path for next 5-7 years, or they can look at it. I think Mr. HLL gave an excellent example, and we tried it. That people who are on a contractual basis, they can never have loyalty to the organization, and without loyalty, you can't work. So to create a framework within the parameters and the legal framework of the country where you allowed them to come on board on that. So there was a loyalty across. And compensation then, so I think at the board level we are looking at a long-term thing. We are therefore looking at next 10 years rather than the next year to get the bonuses or profits.
Wonderful. Yeah, the long term, the moment you increase the horizon, you start seeing people there. I'll give another story again, sir. I've learned from you quickly. I was going around meeting people as part of my job, and everywhere I go, once in 3 months, somebody will come, sir, this is the new star, he's the new branch head. And by the way, he started his career as a frontline salesperson. So the event will turn very warm, I'll feel very happy, and I'll come back and tell a story that a frontline salesperson has become a branch head. It happened 3-4 times, and again, some people relate to it. When I asked the question, why the hell I'm celebrating? It is his right to become the branch head. Who else if not him? And then we went back and saw that the system was not even acknowledging that the career path from frontline actually leads to branch head. It's either you stay here, be productive, find some growth, one rare will get a chance to meet the corporate head people, otherwise you're out. And the pipeline starts from somewhere, the upper middle class as we call it. So some people cracked it. This was the problem, some people cracked it. And again, I just saw my two friends sitting at the back. Two things. Lots of us went and created apps, which is good. Productivity, I can see, I can find out what kind of customers I need to meet, what's happening in my market. However, at the same time, we also built some tracking systems, the GPS. Where is the salesperson going? Attendance marking. If you are 3 minutes late, it's so and so. So it also became a kind of monitoring system on the free-spirited salespeople. Sumit, I'm coming to you, and I think you tackle this. How do you humanize, use technology, but still keep the human part of your interaction with the frontline salespeople alive?
So hi, good evening everyone. My name is Sunit. I'm from Piramal Finance. So of course, with the tech, being available to track all this, I think one thing we follow, and of course something that's been quite successful, is that there is obviously going to be, a mandatory attendance that one needs to come, clocking and all that takes place and all, but there is also a bit of a freedom that is exercised by people. And it's kind of democratized in a way that tracking out all this and showcasing it back again is not something that we follow as a culture. So culture is also something that gets set at the top because, like in our roles, we know there is little that you can complain about work life. So if you love doing what you do, there is no difference between work life because you bring personal thing to work or vice versa. And I think people are also quite matured, and therefore we leave it to them to decide, what is the best time to come about and go about. For example, branch timings. We struggle with the fact that sometimes people want to work beyond 8 o'clock, 9 o'clock, 11 p.m. So again, kind of delegated it downwards. You guys decide what time you want to come and open the branch and shut the branch. Things like this have actually helped us develop a culture of ownership and accountability, where people at the ground decide rather than it coming from a corporate office. And therefore, then they themselves are responsible for how they go about, conducting themselves.
Wonderful, thank you very much. And I recall you having done in your team very successfully. I'll spring a quick question, last question, and then I'll come to both of you to give a summary nugget of what you heard, if that's okay. Then we'll close the panel discussion. Shirang, I'm coming to you. When we started our careers, and you started after mine, much later than mine, we had a clear white-collar person whom we can see and a blue-collar person whom we could see. They are everybody white-collar now in our businesses, all the business we do. But still, do you believe that mindset of this collar and that collar exists? If no, what's happening? How is it getting broken? And if it is there, what should we do for next 10 years or 12 years to really change this mindset of class in the working professional people? Sorry for surprise.
I know, you're used to that.
Yeah.
So, no, thank you, Rajesh, for the question. It's a tough one, but I must say that in the financial services, I would say that I can't say it doesn't exist, but I think over the years, it is getting a bit blurred. But that said, I think it's also to do with the education system and our own recruitment processes. So, for example, we have our own tiering system of MBAs, etc. we hire from. So in some sense, at the hiring stage itself, we start this whole classification of who should enter at which part of the organization, which in most other countries world over, I think, is far more, I would say, even. So in some sense for us, if you get into one of the top tier colleges, you start off at an advantage with respect to some other person who's probably not from the same campus. So I think the market does differentiate in that sense. So in some sense, we are a part of the ecosystem. So we kind of translate that into the corporation. But I think in the pharma world, I can tell you, Rajesh, I served there for a brief while. There, I think I've seen many CEOs who started their career as medical reps, because there, somehow, in fact, you rarely find MBAs there.
Yeah.
Right? In organizations where the MBA percentage is very high, I think this class system tends to creep in even more. So, so that I think is one correlation, because that's the ecosystem that we kind of take into the organization. But in the banking sector, I would say that it exists, but it's also getting, as you rightly said, there are lots of people who've grown up the ranks and have made it really big. But I won't say that it's completely non-existent. It takes quite an effort for them to break that ceiling and come. It's not impossible, but it's not an easy flow as it for someone who obviously starts with an advantage.
Yeah, thank you very much. Yeah, we acknowledge, and Sanjeev mentioned earlier also that the pride of salespeople, we speak about dalda becha hai kya, and then there's a pharma example. There is a lot to be learned from other industries, and I think this is that's what you're saying, this is the need of the hour, these artificial barriers or classes need to be broken. Mr. Mehta, I'll come to you first in terms of what you heard, and in case you would like to give a summary comment here.
I love Rajesh. इनको एक काम दिया गया था. पहले तो ये पूरे टेबल में घूमते रहे और बाद में इन्होंने हम दोनों को दे दिया summarize करो. I love that. That's fabulous. That's a new skill I have learned today. I'm a chartered accountant by training, but my defining role in my career was when I became a salesperson. That was my defining role. And I still tell everyone that if you want to go up the ladder, if you want to understand where the rubber hits the road, if you want to really know where all the work that we do at the back end gets converted into cash, if you want to lead big teams, then you have to get into sales. And sales should have a pride of place in the organization. We come from a culture where we still give huge importance to academic results, and then you have a class system like many of you talked about. At the end of the day, the growth in the company should depend on performance and potential, which has not much to do with your academic performance, but more to do with your attitude, your aptitude, and your ability to be a learner all your life. And that's what we should focus on, and that's how you would get the best talent, move up the ranks, and make a difference to your organization.
Thank you very much. And Mr. Ghosh, I may request to reflect from regulator point of view, because again, some of these are regulatory hassles also. You can't outsource some part of banking. So what's your independent take?
I'm not talking as a regulator, talking as Sandeep Ghosh. I don't feel you need to outsource anything more than what you've already done. I think bulk of outsourcing happens in the financial sector. The front line is today the BC. They are not even on your rolls. So what more do you want to outsource? 70% people are working with BCs. So I don't feel outsourcing is an issue. The issue is we have to understand that we don't, I'm chair of NRC in number of boards. We don't blink when we raise the salary of CHRO or risk officer, chief risk officer or a chief operating officer. We don't blink at all. And these runs into crores of rupees. We don't blink when we think about ESOPs and things like that. But we are not very comfortable when we want to do those marginal increases. I still feel that the front line contributes a lot to the top line, because they are the first connect. And I remember one of the governors, while leading out Narayan Murthy from the Reserve Bank, he was a person who would, anybody came to meet him, he would see him off at the gate, downstairs. And while coming up, we came to know that the receptionist was requesting for Mr. Narayan Murthy's visiting card. So he said, then I'm not bothered what's happening to the value of the rupee. If the Reserve Bank receptionist does not know Mr. Narayan Murthy, who is coming to meet me and is asking for a visiting card from him, means where is the Reserve Bank? So that he would take care that the front line is the image of the organization. Who is meeting the chief risk officer? Who's meeting the CISO? Nobody is meeting the CISO and, except for the board or maybe the top levels. Who's meeting them? The day-to-day connect is with the front line. And we need to open ourselves to that front line. I would only say that in the 21st century, India is a difficult example where we want our salaries to rise every year, and we also want vertical movement. Many organizations, they want a change of designation also, every year. So, nowhere in the world, everybody is comfortable if they are moving horizontally, they are specializing in their area of work, and they are getting a reasonably good increase where the salary is concerned. But if we have developed, it's not the B school, Mr. Daya. I was stagnating in a particular grade for 11 years. Not because there was any problem with me, but because there were a couple of cases in the Supreme Court which you could not change, and they were because of the labor unions, who felt, how can you recruit directly in middle management? You have to recruit people only at the base and they should go up. And they quoted innumerable examples where a part-time typist or a clerk had become chairman of 2 banks and deputy governor of the Reserve Bank. So there was a career path for them, and they were able to say that authoritatively. So it's not, nobody is happy with what they are doing. Everybody wants to go to the top. In fact, the typical cliched question is, where do you see yourself in the next 5 years? And that guy jumps up and says, I'm looking at the CEO's position. I would rather ask the question should be changed to, how do you want to skill yourself in the next 5 years? And what is the type of support you want from me? If that was the question, there was some relevance. Otherwise, we'll continuously, even today in the interview board, I'm quite surprised they ask these questions. Where do you, nobody knows, 5 years you'll be there in that position if you're not working and not skilling yourself. You should be able to communicate that authoritatively. And if you require anything. So when I used to head the HR, when people said, sir, cost of education has gone up, I said, if you want to study the day you join Reserve Bank, any course you want to do in the country, we will pay for it. You just ensure that you have to pass it in the first round. And if you pass, we'll also give you an increment. So you can grow if you want. The organization has to take that call. But I'm only saying, look at the base salary. But it's not very good for an organization that 85% of the salary budget is limited to maybe 15% of the staff. That has to flow down somewhere or the other, and the regulator is talking about it.
Thank you, sir. Thank you so much. We'll end with this. Sorry, you want to say something? Okay. So first is it's a good that we, all of us, there are people on the board, there are CEOs, CXOs there. We are talking about the issue of the frontline salespeople, frontline, not only sales, but any frontline people. I think some things have been done in the past. COVID was a wake-up period, but lots more needs to be done. Technology is one solution. There are other solutions also, as somebody mentioned, that what happens to the culture, what happens to one-to-one touch. So thank you very much for all your support, and thank you for your support in helping me do my KRA. Thank you.
Thank you so much, Rajesh sir, for hosting the wonderful session. We'll come back to the audience for a fun Q&A session at the end. Now, for the next session, I want to invite a very special person who's supposed to be a true patriot of this country. The reason I say this is because he has spent the last 35 years of his life towards improving the youth of the country. At the age of 62, he went ahead and got a law degree because he wanted to make law accessible to the poor. And at the age of 67, he went and started his 8th company called Quanta People to accelerate the growth of the youth of this country. Muralidharan sir is the chairman of TMI company, of E2E, of CNK, and now the latest baby, Quanta People. They say inspiration comes from a very strange place, and his inspiration actually came from a McKinsey article. The article went on to say that the performance multiple between your top 10% and the bottom 10% can be up to 4 times. This one statement was the inspiration for starting a new company called Quanta People. TMD sir, I invite you to share your thoughts. There is a very small presentation that we've made where we talk about what are the blind spots in performance. Over to you, sir.
Thank you so much. I think, I'm sorry to say this, I'm known for being very blunt and honest. 5 years ago, I heard the same story. When I used to come to a meeting, we must do something for frontline. They are the frontline or the lifeline of companies. Everybody is talking. But do you know the number one problem for frontline? They're living hand to mouth. Most of them cannot meet their expenses. We did a study for Andhra Pradesh government. They trained 1 lakh people from rural India, women especially, in retail sector. All of them were given the best of opportunities. Chandrababu Naidu was very keen. He brought them into cities. 6 months later, 80% of them quit. Out of the 80%, 70% of them, or 56% of them, borrowed money and ran away. So the study was, what happened? Because these are villages, we brought them into cities, we gave them minimum wages. What they never calculated, what the cost of living is more than the minimum wage they were getting paid. So what the women did, as soon as they came, they got a job, they came into city, started working, and suddenly they were going out of pocket. So what do? You borrow or you steal. Some of them are caught stealing from the same retail store. So what all of us must understand, I don't think any of you understand, because we are in the highest end of segment. I get 1 crore of salary, somebody gets so many crores of salary. If a person is living hand to mouth at an entry level, all the story of culture, I mean nothing to him. What he means is, can I pay my out-of-pocket expenses? And second factor, which I've been telling clients, and I think many of them are here, don't talk compensation. Nobody is interested. Talk about saving potential. When we used to recruit for the Middle East, our only story was saving potential. We never talked about salary. Today, if you talk about saving potential for a frontline workforce, is 0 or negative. Now, how do you change that? This is where the chicken and egg story comes. When you go and tell companies, why don't you revise the salary? No, but this salary itself is not producing income. You're not making enough money. So this entire journey of mine was to understand the chicken and egg story, which comes first, productivity or salary. In my mind, my exercise has largely focused on productivity. I think if you don't increase productivity, we can talk as much as we want. Companies and boards will always say that productivity is not high, I cannot revise salaries. I think today I was talking to some of the people here, and I know for a fact, I've been a recruiter for 25 years. Salary is constant, stagnant in this BFSI sector. And if you adjust for inflation over 10 years, it's all about double. People are losing money. And my request to all of you is that please treat this as a most fundamental problem of Indian people, Indian youth. And we talk about 6 million people. I go to a lot of young people. They keep asking me the same question. When you talk about productivity, you say productivity is important. Who's asked somebody in the senior management when they increase their salary, they go to compensation survey, they revise salaries? Has anybody asked them, how much is your productivity going up? We ask so many questions to the front line, productivity they go up. We don't do the same thing when senior managers' salaries go up. Because more determined by competition, we don't want to lose the talent, so we revise compensation. So to me, first point I want to highlight to all of you, if you really want to solve the problem, compensation is an issue, productivity is an issue, we have to revise productivity. That's my first point. The second one, when I started working only 3 years ago, when you want to go to the board level, I was asking myself, how do you bring this issue to the board level? And I think HR people here also know, when you go to the board level, board doesn't understand all these percentages, attrition ratios, all this they don't understand. They only understand Rokuda. What is the cost, financial cost of what you do? For example, what is the cost of attrition? What is the cost of wrong hire? What is the cost of underperformance? This is where I started my study, saying that unless I bring a financial metric into whatever we do, it will never carry any weight in the board level. So what I'm going to present is 8 or 10 important blind spots, which I found across sectors, across companies. I'm going to show you multiple data. And this insight actually can give us the reason, the pathway to increase productivity significantly. Let me start up. Obviously, some of this we have discussed already. 6 million workforce is already there right now, right? Apart from the hiring. In 10 sectors, I think he talked about BFSI is the largest sector for Frontline. Absolutely correct. There are only 3 sectors where the largest number of graduates are hired in this country. One is BFSI, and second is healthcare, and the third is IT. Nobody ever asked the simple question, how come IT guys are now cribbing? IT industry managed to ramp up dramatically. It's produced the largest number of training centers for themselves. They never have a shortfall in getting more applications for any job role. Only one factor, their salary is among the best. Today, if you ask for young people, first job, they want a government job. Government job is the best job for entry-level salaries. Best entry-level salaries are only in government jobs. The second is IT sector. So obviously, if you don't understand that this reality of compensation and productivity are very closely interlinked, and if you have to crack that problem, we need to listen to data. My biggest problem, and I'm saying it very bluntly, whenever I go and talk to people, we have tried this before. Yeah, we know this. My only point was, most of us in this room, including me, we validate anything which comes in front of us based on our past experience. And I think it's the biggest liability. Look at data dispassionately, and I'm going to show you data, all 8 or 9 interesting data. All of them are against your instinct. Oh, it's not possible. But data is showing this continuously. Let's start with the first slide. The first question we asked was, if a set of people join the company, 12 months later, you compare their average performance, only 12 months later, right? It's like an MBA campus at the end of 1 year, the variation of performance between the top 10% and bottom 10%. They are in the same company, joined at the same time, doing the same job, in the same competitive market, everything remains the same. What should be the variation of performance? When we ask this question in manufacturing, if you go to an assembly line plant, the variation of performance between one person and another person cannot be 1:1.1 at the maximum. But when you look at this data, look at this. This is the life insurance. We took a sample of actual data, 218 people completed 12 months in the company. The top performers, top 10%, not top 10% average was 388%. The bottom 10% was 9.9%, and the variation was 39 times. So simple question. What are we doing to this company? You're all coming to your company, you come with sparks in their eyes. What are we all doing here? How did you create this kind of variation? There's something you must be doing wrong, right? Because they hired the same way. You only put the same rules for hiring norms and training norms. You do so many complicated things, but at the end of the day, there's a variation. Let's look at the banking industry, 11 times. And the same thing with home loans, which is one of the samples. So we, sector after sector, I'm seeing something we are doing wrong. You cannot allow this, because in any other system, if people have a performance variation of 30 times and 20 times, the end of 12 months, and they all remain the same, they enter the same way, the same aspiration, the problem is with you. Your performance management system is what we have to attack. Number one. Next slide. Second, I asked a very simple financial question. What is the cost of underperformance? If people are at various levels of productivity, can we calculate the total cost of underperformance of all the employees? And what is it as a percentage of salary that you pay? 48%, in some cases it's actually lower. 40 to 50% of the salary that you pay is wasted on underperformance. In a factory, if you have a factory and the factory produces wastage, you do machining, whatever, you wastage of 5%, whole board comes after you. 5% wastage. Here we are seeing 48% wastage. Because the first time the board should ask this question, I think you were asking, what should be asked on the board? Please show me as a financial data, attrition data you give me in HR, tell me the total cost of underperformance in your team. Show me the data. I want a reduction year after year. Whatever it be today, it doesn't matter, but it has to reduce. It's a very important indicator. And because that reduction goes straight to the bottom line, right? That's the second. Third, next slide. Then the very interesting insight was, and it is very important for us to understand the front line. They're all Generation Z. Generation Z is your children. Many of your children, maybe grandchildren. One thing that differentiates them from us, our generation, the very high level of self-esteem. So when you join the companies, the first thing he wants to do is to win. He has no intention of losing. Many people still mentally think, no, he's coming, hanging around, he came in, trespasser into a company. No, everybody wants to win. But in their own mind, there is a cutoff threshold point at which time he believes he's going to win, and attrition falls. So what you did with this data was, took the attrition of all the employees over a period, and then took the attrition of employees who crossed 50% of the target cumulatively. And this we call it attrition multiple. The normal attrition and the attrition of people who are beyond 50% of target, this attrition multiple. As you can see, the first third month, the attrition ratio was 4.63. That means people who cross the threshold level tend to stay. And at the lowest level, even after 9 months, is about twice. So in other words, what this study shows, this data shows, is that incentive is one threshold. All of us know the employee makes incentive, he stays. No, that's not true. The actual truth is, there is a threshold level at which employees believe they are going to win. And once they cross the threshold, they stay. Now, it's your job and our job to use data to find out what is the threshold level, 50%, 45%, and that's what our data shows here. Next slide. We talked about attrition. So we asked a simple question, when are people leaving? Attrition is a nice word because 80% attrition, 90% annualized, but it doesn't tell you when people are leaving. That's the key question. When are people leaving? So this is a cumulative attrition. At the end of 6 months, 63% of the people who attrited over 12 months left in the first 6 months. Right? So the attrition is heavily loaded in favor of the first 6 months. Every company you go, and when I ask HR people, they say, yeah, if a guy survives after 6 months, we'll see. Let him come, put him onto the job, reduce the training period if you can. If he survives, sorry. You are going to lose more money in the first 6 months because 6 months salary you paid him, you're not looking at the salary that you pay, right? So the infant attrition is the number one problem now. Therefore, we have coined a phrase called 56 problem. You have to make people cross 50% of target in the first 6 months. Attrition falls, productivity goes up. Then how do you do that is a fundamental question. We're going to show you our solution later on in the video. Next slide. The last question, which few questions we're asking is, how do you calculate the cost of wrong hire? Everybody says its cost of rehire is equal to whatever cost of hiring, cost of induction. No, there's something very big item which you're missing out. When you replace somebody, the guy who comes in is going to start at zero productivity. And he's going to build up to the productivity of the guy who left or a guy who's going to reach the top. So what is the cost of underperformance of the new hire until it reaches the basic productivity level is the real cost. The cost is not the cost of hire, is not the cost of training. And that's the cost of wrong hire, as you can see, is anywhere between 3 months to 6 months of salary. Normally, hiring cost today is about 1 month of salary, 1 month to 1.25 at the most. But the cost of wrong hire is anywhere between 3 times to 6 times the salary. This again, nobody is calculated because unless you put the underperformance value, you cannot total them. And that's what you've done. Next slide. Another very interesting insight which we asked was, are people stuck in serious performance bracket? For example, a set of 1,000 people join. Are they stuck in various performance orbit? So it's a very interesting question I asked. So what we did was, we took an end of 12 months, we broke them into sub-cohorts, top 10%, next 10%, next 10%, and studied their performance of this cohort backwards in time. And you can see here, this is the same cohort at the end. These are all grouping. They're all parallel. What does it mean? People tend to get stuck in performance orbit. And if you don't impact them early enough, they'll be stuck in one of the performance orbits. Some of the lower performers will remain low performers. Top performers take off from the top, as you can see right from the top. So this performance banding is a very interesting concept in performance management. What you need to do is to understand that you have to intervene very early, and secondly, move them one step at a time. People cannot jump from low performance to high performance, put them in a higher performance band, and for that comes the very interesting concept of incentive. Why should incentive be paid on achievement? Why can't we pay incentive on improvement of performance? For example, my average performance in the first 6 months is 60%. I'm not earning incentive. In the next 3 months, it goes to 75%. I'm still not earning incentive, but I've improved my average from 60 to 75. And that's the meaning of going from one slab to another or one orbit to another. We don't incentivize him. We studied the data of the number of people who get the benefit of incentive. Very small percentage. Incentives are designed today for rewarding high performers, but doesn't motivate a single low performer, a single mid performer to improve. The incentives are not designed. Incentive must be designed for motivating to improve their performance from one orbit to another. And that's another concept which you're talking about. Yeah. And the last, this is a very interesting concept. We've been asking that question. You segment customers. All of us are expert in understanding customers, right? We do a lot of customer segmentation. MBA school, that's what they teach us. I said, can you not segment employees? If you want to segment employees, what will be the 2 dimensions? What is how long he is in the company, and what's his average productivity? What we call attrition and productivity. So you see the plot here. Each dot is one individual, and the dimensions are how long he has been in the system and what is his average productivity. And you can see the distribution of people performance, right? The interesting part was when we did this exercise, then we decided to build it into 9 sub-segments as a segmentation. This segment is called a dream segment. These are the guys who stayed in the system and performed very well. And these are the guys called a horror segment. They stayed in the system, did not perform. Now the point is, we talked about hiring better. I mean, one of the questions we asked, how do you hire better? The most obvious way is to understand this segment. Who are they? What are their aspirations? What did they come from? What kind of financial milieu they come from? So when you look at 2 dimensions of attrition and performance, then that segment, dream segment insights are very valuable in hiring, training, etc. Next slide. And the last one, I think Mr. Ghosh also mentioned, we realize in Gen Z, the most important thing to manage is to manage daily output management, not daily input management. Many of us measure time. What time you came, where did you go? This is input side. Output side is very simple. What are the 7 lead indicators of performance? And what is his output on a daily basis? Now, when we did the study, and we talked about top 10% performing 33 times, we started getting interested in the question, what are the top 10% doing differently? They must be doing something differently. So when you track their performance and talk to them in large numbers, only 2 items came. One, they were focusing on certain subtasks every day, which is what we call critical task. Second, they executed it very differently. from the rest of the jugaad, which many people are doing. So secrets of high performance is only measurement on the key indicators and giving them the knowledge how to absorb the secret of success of top performers to bottom performers. So this is the basically performance, daily performance gap if you are able to guide him. See, when we ask some of the non-performers, why don't you go to your boss? The boss is the most important guy. He said he never has time for me. He only has time for performance. When I go and ask him, he's already angry, he's shouting at me. And he keeps on telling me, tell me what I should do today. I don't care. Work harder. In fact, there's a story in Bank of Baroda story. Many of you might have read it. There's a story in Bank of Baroda that the employees have made a complaint to the managing director that the local office, the regional manager and somebody else is telling them, "Khudkushi kar lo. Jo karna kar lo." He said these are the words he has used, the supervisor is used to tell the guy who is non-performer. The problem is, if you don't tell them what to do, we have no right to tell him you're not a performer. Then why am I a supervisor? That's my job. My job is to tell him what he's not doing right and fix it. For doing what he's not doing right, we need a lead indicator-based tracking system, and then only we can track performance. Last slide. So I think finally we want to leave with a few questions for you to think about. There's another slide there. Okay, who's responsible for Frontline to win? Is it a supervisor? Is it a board? Is it the management? Is it the shareholder? I think it's a very important question. Somebody should take ownership for making Frontline win. If they win, company wins better, which is what Mr. Mehta was. Hindustan Lever is a dream company for most of us in campus. Because most of the guys who joined Levers went somewhere in life. We know, management training, right? Who's responsible? Secondly, are we listening to data? We should stop saying this happened in the past, this is what we did, this is how it works. Sorry. Your entire analytics is based on some other context, in some other world you're living in. Listen to your own data. Analyze your data and it tells you so many insights which you're not able to see from your own normal thinking. And of course, normalizing, I think Rajesh Jaya talked about. We cannot say that attrition will be only 60%. One of the HR head told me, I know Pareto's principle, 80-20 rule. You don't know in school? I said, then why am I paying your salary then? 80% of the people are delivering 20% of the performance, right? Then why do you think I should pay a salary to HR person for what? Your job is to make sure that 80% is delivering 60, not 20%, 40%. Our job is to treat the performance distribution and how to improve the bottom to bring it up. Moment you bring it up, performance goes up, salary goes up, self-esteem goes up, the whole society benefits. Yeah. So we'll start. I think I'm sorry, I'm a little bit blunt and I get carried away, but I have only one request for all of you. Please imagine your son or daughter going to one of the college, from college he comes out and joins this company, and imagine he gets sacked for non-performance in 9 months. Then you'll understand what is the impact of what we all do to the youth of this country. But I think we have a pathway. What we are doing last 3 years research is what we are going to show video. What is the solution? Okay, I talked about the problem, analytics, etc. Now we built a pathway to solution, and that's what we're going to show, the small video. And that I think is where I think I want to stop after that. Thank you.
Did you know there can be as high as a 10 times variation in the performance of frontline workforce? What is the variation in the performance of your frontline workforce? Do you think the top performers in your company feel valued enough? What % of your top performing employees attrite early? And what % of your bottom performers are wasting your manpower costs? Should there be a change in the way you set targets for your frontline workforce? Should they be incentivized differently? Are your employees productive for 8 hours a day and 22 days a month? What are these top performers doing differently? Quanta People's new integrated solution for people performance management answers all these questions. So how does it work? Step 1, you select the role and you dump the performance data on us. This includes employee demographic data like their name, date of birth, qualification, and past work experience. We need this to identify where your top performers are coming from. so you hire exactly what works for you. We also need employee work data like how long they have been in the role, tenure, which zone, region, location, or branch they belong to, and who is their immediate boss. And last but not the least, we would require their performance data, ideally for a year, the more the better. You don't need to organize the data, you just need to give us the dump, we'll do the rest. We call this step People Performance Analytics. Lens, our internal analytics platform, helps in analyzing your data to tell a more complete story. Our platform starts by identifying and addressing inconsistencies in your data through comprehensive error reports. This ensures a clean, reliable foundation for analysis. From there, Lens unlocks over 100 detailed reports that uncover hidden patterns in frontline workforce performance, highlight inefficiencies in target setting, and provide actionable insights into incentive strategies. We don't replace your analytics team, we partner with them, equipping them to spot gaps and reveal the unseen. With Lens, you gain clarity, precision, and the confidence to drive impactful decisions. Step 2, sync. Once we have identified where your top performers are coming from, we program our platform Sync to help you hire the right candidates for you. Sync is Quanta People's patented talent acquisition platform, India's first to make hiring truly contextual. Sync not only benchmarks against your own top performers, it also understands candidates deeply through 3 unique tests. First, the Job Personality Fitment Test, a proprietary tool developed by TMI Group, customized for India, based on John Holland's model. It helps candidates discover their true job persona and the type of roles and industries they'll thrive in. Second, a scenario-based evaluation that reveals how they perform under pressure, handle objections, and think on their feet. And finally, a demographic evaluation that grounds the fitment in real-world context. Sync integrates with any ATS, gives candidates an immersive preview of the role, and ensures hiring is transparent, mutual, and right the first time. Step 3, we spend a couple of days with about half a dozen of the role practitioners to understand what is it that they do exactly and how much time they spend doing it. Then we make something called the activity-based cost sheet for the role, where we break the role into stages, those stages into activities, those activities into tasks, and those tasks into subtasks. After arriving at the list of subtasks, we identify all the roles involved in every subtask and how much time is spent on each of the subtasks. Then we request for the manpower costs of all the roles involved and arrive at the cost of every subtask. We also consider the cost of failure of each of the subtasks. After doing all this, we arrive at the final list of the top 20 critical tasks for the role. We now have the list of top performers of the role and the critical subtasks. Step 4, launch Mirror. After hiring the right talent with Sync and identifying critical tasks for the role, the next step is preparing new hires for success. That's where Mirror comes in. Mirror is Quanta People's AI-powered practice ground for frontline sales. As part of induction, new hires rehearse their pitch before they ever face a customer. With Mirror, they get instant feedback and a clear scorecard across tonality, body language, and content. They can role-play multiple real-life scenarios from objection handling to closing the deal, building confidence and refining their approach. The outcome? Sharper pitches, faster ramp-up, and improved sales effectiveness from day one. Step 5. DARTS is a lead indicator-based performance tracking tool within Clan. It is the backbone of Clan. It tells your workforce what to do daily to improve outcomes and enable supervisors to give actionable, motivating feedback in real time. Step 6. Introducing Clan India's first integrated performance acceleration app, built only for your frontline, designed to increase productivity by 10% and reduce attrition by 10%. Our analysis of low performers clearly indicates the need for a daily tracking system focused on critical tasks. Clan digitizes the secrets of success of your top performers. These real-life strategies are shared as short vernacular videos, making implementation easy, peer-driven, and personalized. The Clan user journey follows a 6-stage loop. Identify the daily performance gap, get motivated, find the root cause, watch a relevant video, implement it, see real improvement. It's a habit engine built on performance science and frontline psychology integrated into daily workflows, not bolted on. To understand how, let's borrow a concept from aviation safety. The Swiss cheese model, originally developed by James Reason, it explains how disasters occur when multiple small failures align across layers of defense, like holes in slices of Swiss cheese. At Quanta, people, we flip the script. We've adopted a positive Swiss cheese model where success happens only when exit pathways across layers are aligned. Each slice in our model represents a carefully designed user layer in the Clan Darts ecosystem. The journey is engineered around 5 integrated performance layers. Motivation layer customized nudges and performance insights create belief and drive intent. This isn't one size fits all. It's real-time, adaptive, and personalized. SOS Discover Layer. The app identifies key lead indicator gaps and offers high-performer created video playlists for implementation. Hyper-local, relatable, and proven. Tribe Learning Layer. Short vernacular videos with interactive feedback loops ensure the user doesn't just watch but learns, bridging intention and comprehension. SOS Implementation Layer. Behavior change is hard. That's why we don't stop it. Watching Clan ensures the user commits, connects with a star performer, and receives timely nudges until execution happens. Reinforcement Layer. Every small win is celebrated. Performance improvement is tracked, recorded, and recognized, creating a virtuous loop of motivation, action, and results. Clan gives supervisors daily AI-driven insights to coach frontline teams better. Each morning they get clear, actionable huddle points, customizable and focused, so leaders drive performance with purpose. This model solves what others miss. Unlike LMS, we don't push passive content. Unlike nudges, we don't fix surface symptoms. Clan measures real behavior and enables daily course correction. Your front line is your growth engine. Stop guessing why some succeed and others don't. Start enabling every employee to become a top performer. Help your frontline win at work.
Thank you very much for your attention. I think it's a little longer video, but I think what we wanted to say was, I think earlier also many of the speakers said, there's no simple solution to fix complex problem. The complex problem is productivity is not it's an 8 or 9 layer problem, and we are trying to attack with all the dimensions put together. But the solution implementation is very simple. All a person uses an app. That's it. Behind it, huge amount of complexity of technology, AI, analytics are there. But at the end of the day, user uses only one app. He gets some advice, he gets a nudge, he executes it, performance improves. That's it. So, thank you very much.
Thank you, TMD sir, for those powerful words. Quanta People is India's first company which has 5 patented products only for your frontline. So on your table, you will find a product feedback form. I request all of you to fill this form if you want to know more about the products. Please fill the form and leave it on the table. We will reach out to you after the session. So based on 3 years of research from the Center of Excellence, we have published a first of its kind COE journal that has 50 articles across 10 pillars of frontline performance. I would now request Mr. Sanjeev Mehta sir, Sandeep Ghosh sir, Srinivas Nagappa sir, Rajesh Daya sir, TMD sir and Ravi Ramakrishnan sir to come onto the stage and help us unveil the first of its kind performance journal for your frontline. A huge round of applause, please. Yeah, yes. You can speak.
You should not open one. This is your product.
As he's opening that, we said if you want to change performance at the national level, we have to publish our research. We have to publish the strategy, the concept, the mathematics, the alignments, all of them should be published so anybody can use it. So we started a Center of Excellence, COE, web page and LinkedIn, and we started a journal. The journal is going to come out as we meet more customers, we engage with more of them. All the data is rolled into some case study and presented here. This is the first of its kind I've seen. Even literature doesn't have much of material on Frontline. And we hope to publish it regularly.
Thank you so much, everyone. I would now like to introduce a very special person, Professor Raghuram Bomraju. Professor Raghuram Bomraju. Raghuram Bomraju, correct. No, Raghuram Bomraju.
Raghuram Rajan is what I heard. Yeah.
I got the name. Professor Raghu is an associate professor of marketing at the Indian School of Business. Prior to joining ISB, he served as an assistant professor at Iowa University of Science and Technology. Professor Raju currently focuses on two streams of research. One is on Salesforce management and the next one is on market finance interface. His first dissertation essay received the Best Dissertation Award from the Sales SIG, and his second dissertation essay was published as a lead article in the 2019 January edition of the Journal of Lead Article in 2019, a premier journalist in marketing. He also holds a PhD in marketing from the University of Houston, an MBA from XLRI Jamshedpur, and an MS in quantitative economics from the Indian Statistical Institute. Prior to his doctorate, he worked for 4 years across analytics and retail industries. I request the professor to come on to the stage and share a few words, please.
Yeah, the context is we are now signing up with ISB as a partner for us. What you do and what sales management courses you do, and what is the relevance of our partnership?
Sure. Thank you very much. I guess we are running a little late, so I'll keep it short. So I think just maybe modify one sentence that you said, that there is very little literature on Salesforce in Indian context, but not otherwise, right? So when you're looking at the US and other countries, there's a huge literature on how to operate your salespeople, and in fact, it is a coveted career there. Unlike in India, where you're looking at sales probably when you are out of no job, right? I guess that is what we should strive to do, how to make a sales a career path in India, which is probably currently not happening in many industries. I guess in few industries it is a great career path, but many other industries it may not be so. So how can we achieve that? Broadly, I work on sales incentives as one area of research and sales training as one area, and it's very interesting to see how you're trying to improve the performance of low performers. So just to give an example from my association with a company, an Indian company based out of Chennai. So they had this issue of, they run the sales contest, right? So I'm sure many of the companies are doing these sales contests, sales competitions, where you ask the salespeople to compete with one another, and then maybe you declare some 5 to 6 prizes, right? So they have been doing this for years, but what they found is that it is only motivating the top people. Any guesses why? Obvious, right? So when you look at it in retrospect, it's kind of understood that because only they have a fair chance of winning in a competition. So the middle performers and low performers actually have no chance of winning the contest. So which actually defeats the whole idea of running the contest, because top people are anyway doing good. So why should I even bother to run the contest in which only these people seem to be motivated? So we borrowed the idea of customer segmentation, and in fact we segmented the employees of that organization into multiple buckets, and we said, why don't you run a contest at each segment level, right? So within each segment, the people are more or less similar, they have similar tenure, similar past performance, and we did see that across the board, the performance has improved, right? So when you we divided the whole of India into 2 different geographies. In one geography, we run this segment-specific contest, and the other geography of India, we ran the traditional contest of putting everybody into one bucket, right? So when we did this multi-segment contest to say, we did see performance improvement across all the segments, including the lowest performers, right? So I guess when you give hope to people that they have a chance to win, that they can excel, and when we are paying fair wages to them, I'm sure things will work out much, much better. And this is a short initiative from our side to see what we can do in a personal capacity. So I'm very glad to be collaborating with you, sir. Thank you so much.
Thank you very much.
Thank you so much, Professor. It is an honor to be associated with one of the best business schools in the world to solve the problem of frontline productivity and attrition together. Now, for the last session of the day, we have an open floor for reflections and questions from our distinguished invitees. This session will be moderated by Mr. Ravi Ramakrishnan, the director of TMI Group, who has 30 plus years of experience across MNCs, consulting and HR services. He is an IIT BHU engineer and an IM Calcutta alum. He has led flagship capability programs, India entry employer branding for companies like Ford, IBM, Oracle, Toyota, etc. World Bank MOOC in public procurement with learners across 190 countries and capacity building of more than 1.3 million Anganwadi workers. Ravi sir, please come on to the stage and...
With everybody's permission,
Yes,
I
sir.
would like to say that can we do this over a dinner that we'll all have together? Because I'm going to consume 10 minutes unnecessarily otherwise, right? I did frame some questions based on what both the speakers spoke and what Rajesh ji went around doing. So can I park that and then we do it when we are, informally meeting, rather than have a forced question and answer session? We're coming to the end, so might as well go with the spirit, close it, and then let's break for a quick dinner. Okay?
Thank you, sir. So the floor is open for dinner and questions. Thank you so much, everyone. Yeah.
It's not just for the 5 of us. So there is a copy that's available for all of you. And give a vote of thanks. You do that.
So, thank you everyone. As we bring this wonderful evening to a close, we at Quanta People Solutions Private Limited would like to take a moment to express our heartfelt gratitude to all those who made this launch truly memorable. We would like to thank first Sanjeev Mehta sir and Sandeep Ghosh sir for being our chief guest and guest of honor. The conversations around Frontline and the roundtable discussion were truly an eye-opener, and it is great to have such distinguished leaders discuss the biggest problem in our country today. We also would like to thank all the CXOs, the business leaders, the well-wishers, business partners, and guests gathered here. Your presence is an acknowledgement, a testament, and a strong vote of confidence in QP's vision and mission ahead. Thank you so much for celebrating the Frontline with us. To our investors, advisors, and early supporters, thank you for believing in the idea and underscoring the problem that needs to be resolved. Your guidance has shaped the foundation we truly stand on today. A special note of appreciation goes to our incredible team and the ground staff, especially Archana and Akshita, who could not be here today, for making this event a reality. QP is built on your passion, your hard work, and relentless commitment. Tonight is a celebration of the Frontline, and it is a celebration of you as much as it is ours. We also want to thank our vendors, our event organizers, and everyone working behind the scenes. You've turned this launch into an unforgettable experience, and we're truly grateful for your efforts. Tonight marks the beginning of a very exciting journey for us at Quanta People, and with your continued belief and support, we are confident that the road ahead is surely going to be successful, not for you and me, but for the Frontline of this country. Thank you so much, everyone, and the floor is open for dinner and question and answers. This is me, Srinath, signing off. Thank you so much. So dinner is ready. I think we all can break for dinner, and we can have the Q&A session as we have our dinner. Thank you.